Question to Carl, please.
Hi, a couple of questions. First, can you talk a little bit about what sort of rental reversions are you seeing in your renewals so far this year in the new fiscal year in Hong Kong? And also, can you, based on the pre-leasing progress that you have made over for the Mong Kok project, what sort of initial yield on cost are you expecting? If you can give us an update. Thanks.
Rental or leasing discussions progressing reasonably well. We always a few months ahead, I guess, in our discussion. So with the discussion so far, still pretty strong. I think the market, we did see a slowdown, especially towards second half of 2016. We were expecting perhaps a pickup towards the end of last year and early this year. And the pickup, I think, didn't happen until probably around March, April. But we certainly seeing bottoming out. If you look at the numbers, I think for March, April, you need to add the two numbers together to compare year on year because Easter was in a different time last year. But if you add March and April together, actually, we have already seen growth across many sectors in Hong Kong. So we think we do see a bottoming out, which give confidence to our tenants to negotiate with us in terms of the reversion that we can achieve. For Mong Kok, probably a bit too early to give you the any sort of numbers yet because we're still in the middle of a negotiation with a lot of tenants. Perhaps at the next result announcement, we can give you a little bit more information. Thank you.
Sarah, please.
Thanks. I read in your release that you're coming in under budget on Mong Kok. Can you maybe talk through some of the things that are contributing to the cost savings there, or whether it's any changes?
I think if we are perhaps very aggressive on our budget. We were hoping to achieve very high rental, but we have to recognize the fact that Mong Kok have a lot of street shops, large and small street shops, that has dropped in rent by 40%, 50%. So we have to compete with that. But I don't think we are significantly below our expectations. So we should achieve reasonably good result at the end. I think I'll stop at that and then share more information as we make more progress towards the end of the year.
Yes, Justin, please.
Thanks. Justin Cole, Goldman. On the acquisition side, could you perhaps share a bit more on your strategy and what you're seeing in the market? You're now inching back to the mid-teens gearing with about 9% exposure to China. Are you happy to raise more of your investment in China, and whether you just keep it in the 3 cities where you're having operations now? Thanks.
Strategically, we have said that we are interested in the 5 cities, Hong Kong plus the 4 Tier 1 cities. We are busy looking at all these locations. If we go slightly beyond that, it will be the River Delta around those areas, but we are really focused on those few areas. The type of assets remains the same, suburban shopping centers around these cities, and then Grade A office. We have been looking at the 12.5% cap on these two, both for China and for office, and that remains. We are about 8-ish percent, 8.8% in China right now. I think the pattern is very, very different. In China, we've been able to get very good growth. I think last time when we announced result, there was a lot of concern about currency, renminbi devaluation. Looking at the renminbi valuation of the asset, it has grew to a level that has totally offset all the renminbi devaluation. Now, in Hong Kong dollar term, we already have the valuation above the acquisition prices of those few assets. So we feel that these assets will continue to perform strongly. We are very lucky to have acquired Metropolitan Plaza recently, and the story is very similar to EC Mall, just getting into around the second leasing cycle. We believe that there will be tenant mix changes and good rental reversion. The seller had a few difficult years because after their acquisitions, the department store left. And department store in general have been quite challenging in China. So they have stabilized the asset, having filled up those spaces. So we are moving to the next phase, which is really to fine-tune the trade mix, the tenant mix. We are doing similar, continue to do something similar in EC Mall. There are a few still large stores and large restaurants that we are trying to remix, so that will continue to happen over the next couple of years.
Eva from UBS.
Thank you, management. I have a question relating to disposal. Since I think last year in May you have held a large disposal. So what should we think about, the coming fiscal year? Any particular assets you have in mind that you think is suitable, sort of to sell it and of course to recycle your assets?
I will pick up your last few words, which is capital recycling. So we have bought a lot of assets. We have sold many in terms of number, but in terms of dollar value, not that much. So we are continuing our assessment of how to continue the process of capital recycling. Difficult to say which one and when and how, but so far the market has been conducive. We have completed 14 asset disposal or sold 14 assets out of the 28 over the last 3 years. 14 was done in this past financial year. Hopefully the market is still with us, but there's no particular timing, and the team continue to evaluate which one. In terms of growth rate, in terms of synergy, whether we can do asset enhancements, all these reasons that are consistent with how we have done it in the past.
Yes, Jonas from Daiwa.
I have a question on acquisition strategy. Yeah, we understand that all along Link strategy on acquisition is to focus on Hong Kong and China, and we understand cap rate in both markets seems to be coming down. I wonder, at this point, the group think there's still enough opportunity for Hong Kong, China, for the group to pursue, or the group will think is also about the time to consider, be more open about other opportunities.
Our focus will continue to be firstly Hong Kong, because given the size of the team here in Hong Kong and the tenant relationship and all that, that will be our first priority if there are available assets. So we look at all different opportunities. I think the good thing that we have achieved right now is that any deal that is in the market will come to us, and obviously the investment team have to do the analysis and due diligence to see whether we should actually acquire any of those assets. And obviously the government also from time to time will have assets pulling out for sale. Beyond that, the Greater China will continue to look at only the 4 Tier 1 cities. We have been offered opportunities beyond these areas. I think I need to be very cautious talking about whether we go much further than that. But we will continue to look at opportunities that come to our desk and evaluate whether they are worthwhile for us. We are mindful of management bandwidth, of return, of growth, of how we are perceived in terms of whether our investors believe that we can actually manage beyond the geographic scope that we currently enjoy a fair bit of success. But we've been offered to look at a lot of things in wider geographic scope, but we haven't found anything that is of interest so far. Yeah.
I have a question from the online. Will the limit for China currently set at 12.5% be increased? Also, given the Henderson Group bought Murray Road for quite a good price, will Link increase the percentage of office or asset in CBD in Hong Kong?
The limit in China, I think there's enough headroom for us, so we will maintain it at 12.5%. I think the only way that you hear from us changing that is if we find a fantastic portfolio. But buying one asset at a time, we have enough headroom. The office sector is a sector that we have diversified into because we believe that the leasing and economic cycle is different. But one thing that office does not enjoy is that if the tenant does well, they don't pay more rent. Whereas for retail property, if we manage it well, more shopper comes. And if the tenant does well, we do share in the turnover, the upside. So that's why we believe that our retail focus is continue to be the right strategy. But from a diversification point of view, we should have some. We are lucky that the asset that we have acquired, both in Shanghai and Hong Kong, have proved to be the right sort of acquisition to do when you look at comparable transactions, especially recent ones in Hong Kong. I don't think we can afford investment into any development projects on Hong Kong Island. So, yeah, that's something out of question for us.
Thank you very much, and as I always say, to the dismay of my team, the IR team is here 24/7. So, again, thank you very much for coming today. And if you don't have my contacts, please come forward, and I'll be happy to converse 24/7. Thank you, George and Andy.
Thank you.